And hello, South Florida. Welcome to our midweek edition of the Real Estate Show, South Florida's #1 program about real estate and America's longest running daily radio show, all about the topic of real estate. My name is Eric Willner, and I am your host here, as I have been for the last 22 years and going for America's longest running daily radio show. And we're here live on our original local station here from 1470 on the AM dial to 96.9 on the FM dial, 95.3 on the FM dial. And you can also take us with you on a number of the local free apps that you can, the iHeartRadio app, the TuneIn app, and the Spreaker app. You can also hear us live each day on our website at automaticlandlord.com. That's automaticlandlord.com. Just go to the top of the page, click on the real estate show. You can see there's the real estate show notes where you can listen to the archives of all of our past shows, read some abbreviated notes on what the show was all about. And you can also click on the listen live button and listen to us crystal clear live right there. Now, we normally are on our live broadcast on the Facebook page, but for some reason or another, the censors that be don't seem to want to let us on there today, and we've been having a couple of issues along the way. So we'll see if we can manage to pull that up sometime during the radio program. We'll do that. Also wanted to let our listeners know that in addition to our live radio show, we are also here on workshops. These are free workshops for our listeners. I'm going to give out the instructions on how you can attend those free workshops. We have them just about every single night of the week. Monday, we had our Equity Accelerator workshop. Tuesday, we had our credit. In fact, we had a very special credit workshop. And as we launched, one of our members, from time to time, I do say that we're looking for some folks that if they like what they hear on the radio and you want to go out there and share the good news and share the opportunities here in real estate, whether it be showing folks how to pay off their mortgages quicker, showing folks how to improve their credit quicker. We recently have now someone who was in the 500s, the low 500s, just passed the 700 credit score. Always like to pop the top and celebrate on one of those. But yesterday, as I mentioned, one of our expansion team members went out and opened their own agency. So we had a little celebration about that yesterday, and that was real good. And so for any of you out there that want to learn more about how we accelerate credit, how we improve and repair credit, I think better than anyone else out there with proven results, then type the word credit and text it to the Real Estate Show's smart number. That's 561-861-2366. That's 561-861-2366. You want to get information about credit. You want to help spread the good credit. Again, the word credit to 561-861-2366. Now, that was a Tuesday night workshop. Wednesday night, we'll be having another one of those credit workshops. It's been by popular demand. So like I said, that's why we are looking for someone on the expansion team, someone we can train in and share this information. And then Thursday, we have our big table, the big round table, as we like to call it. And this is a mastermind setting where folks come from different professions. Most of them have real estate in there. That seems to be the common thread. They're real estate investors that are still fully employed in other businesses, maybe have their own businesses, and other entrepreneurs who come together to share our ideas in real estate, in operating real estate like a business, because in the end, all businesses, all for-profit businesses, that is, are, basically the same. They provide a good service and or maybe a combination of goods and services. And if you can do that economically and provide a great benefit, well, then why not make a business out of it? And making a business means learning how to create systems and duplicate that experience so that you can do it over and over and make money over and over. So that's kind of a rundown for the week. As you know, we have shows 5 days a week live at 5. Each one of those shows concentrates on a different area, like our Mondays on a Mission, which sets the agenda, talks about the mission that we're on here to educate and empower more Americans to enjoy the privilege, the benefit of home ownership, which is what our midweek report is going to be all about. We're going to talk about a number of different things. First of all, really good news. You might have seen the headlines. Bank of America is committing $15 billion to help make more homes more affordable. I'm telling you that when we picked up on the trend and we saw that the scales had tipped in terms of the demand now coming from first-time homebuyers, many of them millennials coming into their peak earning years, expanding their families, and with the urban flight from the major crowded cities, you're seeing the demand for places like Florida, like Texas, Arizona, and I would call the Sun Belt states. If you had the choice to be able to work remotely, and the pandemic has provided that privilege, then why wouldn't you? And so the challenge today, is for many first-time home buyers, people who used to rent, people who used to not need their own home, or more importantly, didn't want their own home, now do. So we're going to talk about why home buyers of new homes may be able to stretch their budgets. That's going to be one of our articles today. We're going to talk about the 3 pandemic-fueled housing trends to watch. And certainly I'll give you a hint. One of them is more buyer competition. We're going to talk about how, once again, here's the theme: first-time home buyers have increased, and the share of first-time home buyers in 2020 was 1 out of 3, a full 33%. But there could have been even more. First-time home buyers could have made a bigger entry, with mortgage rates falling by nearly a percentage point during 2020, but rising prices made home purchases a little bit less affordable. So, but we think that we're going to see more. We're going to see that number. We're going to see that number be, rise in this coming year. Now, on top of that, I want to talk a little bit about, is it better to own or rent? Because all of this, as we start hitting that affordability question, it becomes a very, and you're going to find out this is going to be a very interesting answer. And I'm going to break that down for you in today's show as well. And then finally, speaking about all of the first-time homeowner programs that we've been talking about, the path to home ownership that we have been promoting here on the Real Estate Show, so that you can be a homeowner yourself. And we're going to talk about why there is more than just the money, but the money is definitely a reason that favors ownership over renting. Stop financing somebody else's dream when you could be financing your own. And one of the things that we've been doing here on the Real Estate Show in order to help you achieve that goal is talk about, the grant money and the down payment assistance that's available out there. And I'm going to tell you that there's a lot of it out there. And there's, I just told you about we talked before about the Wells Fargo. We talked about the Bank of America initiative. And I'm going to tell you about stuff that even the banks don't have. In fact, did you know that there are government real estate grants that can help you finance your next purchase or project? Whether you're looking to buy your first home, there's more of those, or you're a seasoned real estate investor. Believe it or not, these funds are provided by federal, state, and local governments, as well as private foundations that support the needs of individual home buyers. So, as a result of applying for and receiving grant funds, you could obtain thousands of dollars of grant money, that never has to be paid back in a lot of these situations. So if and I'll tell you that we have revised the revised version of our report. And now I think as things are finally starting to solidify, and you're seeing the big players in the market come out with their programs, the government announcing theirs, state, local, and again, some of the private foundations. If you're interested in learning more about how down payment assistance could help you, then type the word DPA. It's not really a word, it's the abbreviation for down payment assistance, DPA. Text it to 561-861-2366. And we're going to get back in contact with you with the latest version of the report now. So again, DPA to 561-861-2366. And so on that note, we're going to take a quick break, get a few words from our sponsors. We're going to come back. We'll talk about the first steps in identifying some of these programs for you. HUD, of course, is one of the big ones, promoting quite a few grants this year in an attempt to promote housing recovery. That's the housing and urban development. And but here's the question. Filling out the grants applications is what trips most people up and why they don't get it. And we're going to help you to do it the right way. Fill out the grant applications very carefully and don't overlook any required information, since the approval comes down to complete and accurate details. And we're gonna talk to you about grant proposals on how those works. Anyway, let's go ahead and take that break. We got a lot more for you here on our midweek report, so don't touch that dial. You're listening to The Real Estate Show. My name is Eric Willner. I am your host, and I will be right back. Man, I can't believe we can't get that Facebook up there. Let's see here. Let's try one more time here. It's just not going to let me. I'm going to see if I can turn off the phone and turn it back on if that will help me anyway. But that'll be 2 days in a row that they're blocking. The Real Estate Show. Shoot, we're coming back faster than my Apple is. I'll see if we can't upload the YouTube recording up to Facebook, see if that works. And welcome back. For those of you just joining us, you are listening to The Real Estate Show, South Florida's #1 program about real estate, America's longest running daily radio show about real estate, and the place where you go to get all of your real estate information. Particularly, I will say right now, the information that we've got for first-time home buyers is second to none, and a great opportunity for anybody out there who is interested in buying their first home. We've got you covered no matter what your obstacle has been in the past, whether it's been the down payment. We're talking a lot about we're talking about down payment assistance. If you're talking, and this can come in the form of loans, but more importantly, there's a new flurry of grants, and it's basically gift money with a couple of rules to it, easy to follow rules. So if down payment was your problem, then text the word DPA to 561-861-2366. If the mortgage was your problem, a lot of times I have found, because folks have gone to other banks and gotten turned down, or they went to their bank and got turned down. And when we sat down and actually took a more in-depth look at their situation. Now, remember, we can bring extra down payment if we need to. We've got the ability to do the right kind of window dressing on a loan application, because if an inexperienced bank teller or loan officer doesn't know how to put the right numbers in the right columns, a plus could turn into a minus, or you add in expenses that you take off on your tax returns, but that you're allowed by lending guidelines to add back into your income, you might find out that a debt to income ratio which disqualified you could suddenly requalify you. So, let us know if we can help you out in one way or one form or fashion there. If credit has been the issue, if either anything to do with a loan or credit, whether good credit, bad credit, no credit, type in the word credit to our smart number, 561-861-2366, and we'll send you out some information and tips there. 561-861-2366. Type the word credit, and we'll talk to you about that. And as we were talking right before the break there, we were talking about some of these grants. Now, they have conditions, right? You have to qualify. Some of these, you have to fill out an application to see whether you are eligible, or to see whether the property sometimes is eligible. And you might find out that you might be applying to the wrong place for the right property. So filling out the grants applications very carefully is very important. So don't overlook any required information. Again, if you have questions about a grant that you're applying for and you already know about it, or you don't know about a grant that you could apply for in your area, DPA, text that DPA to 561-861-2366. Most real estate agents, or most real estate grants, I should say, will require a grant proposal, and that's where you're checking off whether you're going to meet the requirements. Sometimes they'll ask you to write in what the proposal is, which is basically a business plan about what you intend to do with the grant money. Also keep in mind that real estate grants are favored to individuals who plan to help the community or will in some way benefit the neighborhood, and who knows, just by living there, improving a property is an improvement to the neighborhood, but you got to say it the right way so that the grant decision makers approve that grant application. So make sure you address that for better chances of obtaining the grant. Once the application and the proposal have been completed, send them to the appropriate agency. And if you go through us, we'll definitely make sure that you get it to the appropriate agency so that the package will be received by the deadline. Another important factor. Not all of these are open-ended. Some of these have specific deadlines that have to be met by a certain time. And it's, use it or lose it type of a situation. So some packages can be hand delivered to the local agency, which in many cases was pre-pandemic was preferable. And now you got to make sure that there's even anybody there at the office. And others will be mailed, emailed, scanned, and a lot of them are coming into the current situation that we're in. So I want to switch gears now on our midweek report here. I want to talk about, is it better to own or rent a home? And this is kind of interesting. The Mortgage Professionals of America, which is another organization, a major organization, they came out with a report, and they were talking about that as the purchase market heats up and buying a house gets more competitive, many borrowers may be asking why they're going through the stress and anxiety and headaches of home buying. Single-family rental development are taking off, and I know of many projects that are even still on the drawing board. But I'm going to tell you that rental apartments, rental homes are slated to be built because there's a demand for that is still unsatisfied and completely untapped. And it might be easier, even more financially sensible, to rent in the suburbs rather than to buy, some people think. So while the emotional stress of property ownership and finding one may be heavy, the American dream are certainly, and the emotional benefits, the stability, and we talked about that from a medical and psychological report and research that was done. But between the emotional benefits and the American dream, you need to make sometimes a more numerical case about whether buying a home makes more financial sense than renting. So to see if such a case might be made, the author of the report that I'm talking about, Deputy Chief Economist at First American, looked at 50 housing markets across America to see if renting or buying made more financial sense at this time. In all but 2 of these markets, San Francisco and San Jose, believe it or not, owning made more sense than renting. And by the way, if you don't know, San Jose and San Francisco, we're talking about the Silicon Valley And obviously there where because of the amount of money and the technology boom that's going on, the prices of properties in those areas have certainly taken off and become completely unaffordable out there. And so they go on to say that even in locations where house price appreciation meant the monthly cost of ownership was slightly higher than renting, and P.S. around here it's not, a key element of ownership made it better financial option, and that was equity appreciation. And so they started a study looking at a median monthly mortgage payment in our top 50 markets compared to the median rent. Then when they did that, they found that it was cheaper to rent rather than own in 32 markets. But when they did that, they thought, wait, owning is very different from renting because you get the benefit of equity in the property, the benefit of house appreciation as well. And when we accounted for house appreciation in that monthly cost of owning, they found that it was more financially prudent to own rather than rent in 48 out of the 50 markets in the US. And while two of the outliers were both in extremely expensive markets around the Silicon Valley, as I just said, Phoenix, Arizona was the market where it made the most sense to own rather than rent. And let me tell you, Phoenix, Arizona is a hot market. So the author of the report accepts a future rise in mortgage rates could cool off some of the demand currently driving the pace of the housing price appreciation. But she also noted that house price appreciation tends to be downside sticky. In other words, people would often rather withdraw from the market than sell at lower prices in the housing. So that makes less properties go on the market at those times further right now, which would cause probably a bigger draw on the inventory than a downside to home ownership. So for mortgage professionals and to my colleagues out there in the mortgage business, looking to communicate this information to your prospective borrowers, the house is paying you to own it, between the things that I mentioned, the benefits of emotional, physical, your well-being, the success likelihood of your children growing up in an owned property, the appreciation, the equity buildup, the pay down of the mortgage, the tax benefits, and the list goes on. So, and another study by First American found that housing is one of the biggest drivers of wealth creation in the United States. For a new borrower, especially a first-time borrower, buying a home with an eye to appreciation means buying into this wealth creation. Remember I said, don't pay rent, you're paying for everyone else's dreams besides yours. The author of the report also emphasized that this financial case for home ownership needs to be folded into a wider set of questions, lifestyle questions around why a borrower wants to buy a home. Mortgage professionals should offer this information as a value add, one that supports the borrower's wider hopes and dreams. So that was kind of a real interesting report. The numbers bared out real interesting as well. I'm going to talk about, and this in the remaining amount of time, because I was talking about the also why buyers of new homes may be able to stretch their budgets further. And in fact, I want to put this in my notes when we post it up on our website at Automatic Landlord later. But thanks to the higher costs of owning and maintaining an older home, some buyers may be able to afford more expensive mortgage payments if they choose a newer home. And something we're going to talk about more in our program next week. By the way, a new study from the National Association of Home Builders show that that buyers could potentially spend 36% more on newly built homes compared to a home built before 1960, for example, because of the lower operating costs and the maintenance that they save buying new. Anyway, lots and lots of good stuff. We got some more stuff. We'll talk about the pandemic trends that we were talking about as well. That'll all be up on our website at automaticlandlord.com. And all the information, all of our keywords, if you're interested in the reports, are up there also at automaticlandlord.com. Until tomorrow, well, we'll be back here, same place, same time for more information. We're going to be talking about the a money side of the real estate equation. So until then, this is Eric Willner signing off. Drive safe, wash those hands, and make it a great day. Bye-bye. All right, man. Thank you very much. All right, we're going to end the stream right here. I'm going to save this. I might have to take this stream from our YouTube and put it on our Facebook, since Facebook would not allow us to go live today for some strange reason. What did I say that they didn't like?